Let's go to CommSec. Tom Piotrowski live for a look at the markets today. Tom, how do we open up? Good morning.
Good morning, Pete. We're going to take a little bit of a step back this morning. Down by around 0.1% at the moment is where the futures are pointing. So just basically neutralising the small gain that we saw yesterday. It has been a pretty eventful night on Wall Street for the fact that there was like a laundry list of economic news to get through. So teasing out the important ones in terms of the reports, what stood out was the continued decline in inflation, this time at a producer level, Pete. This was the biggest monthly fall in around 3 years, the decline of around 0.5%. And the annualised decline was the biggest in 2 years. So that takes the headline producer inflation rate to 6.2%. The important thing is the trend. So that's what we're seeing globally at the moment. And that has translated to a sizable drop in long-term interest rates. So, for example, a 10-year government bond in the US has fallen by about 15 basis points in yield terms. That is a substantial decline. It's a continuation of the recent trend. Normally, that would be supportive for stocks, but they are taking a breather. Well, they have done for the last couple of sessions in terms of the rally for the last couple of weeks. So we've got the Dow down by 1.3%, the S&P 500 down by about 1%, and the Nasdaq is down by around 0.75%. But some of these indices, in the case of the Nasdaq, have rallied by almost 10% from trough to peak in the early part of the year. So at the moment, just going through a little bit of consolidation.